Imagine waking up to a quiet morning where everything looks normal. The sun rises, the city moves, yet an unexplainable tension hangs in the air, as if the world is holding its breath. Your phone lights up with notifications from your bank. The numbers are the same, but the reassurance they once gave you is gone. In shops and markets, people hesitate. Money still changes hands, but trust moves slower, fractured by doubt. This is not a dramatic crash with alarms and headlines. It's a silent failure that spreads slowly, unnoticed, and far more dangerous. Because the dollar didn't collapse overnight. It simply stopped commanding the unquestioned obedience of the world. And when the world's strongest currency begins to lose control, every system tied to it starts to shake. For more than 80 years, the US dollar has served as the backbone of global finance. It has quietly supported trade, debt, and economic stability across continents. After World War II, the world was exhausted, broken, and desperate for order. Economies lay in ruins, and confidence was a rare currency. America emerged from the war with something no one else had: gold reserves, intact factories, and industrial power ready to supply the world. The dollar wasn't chosen by force alone. It was chosen because it felt safe in an unsafe world. Slowly, global trade, oil markets, and government debt aligned around one currency. The dollar became the center of everything. Today, more than 60% of global foreign reserves are still held in dollars. That dominance shapes every major economy on Earth. This level of reliance is not pure trust. It is dependence disguised as stability. Every trade route, loan agreement, and commodity price passes through this system. There are no real shortcuts around it. And once a country is inside this system, leaving it becomes painfully expensive. The dollar system works like gravity. It is invisible, constant, and almost never questioned. When the United States prints money, the impact doesn't stay within its borders. The shockwave spreads outward across the globe. Inflation travels silently, crossing borders without permission. It reaches places that never created it. When interest rates rise, strong economies adjust. Fragile ones begin to bend. Debt becomes heavier, and imports become harder to afford. Pressure builds quietly. America exports inflation through its currency system. The rest of the world imports the consequences. None of this requires conspiracy or secret meetings. It is simply how the math works. For decades, no nation seriously challenged this arrangement. The cost of resistance was too high. Challenging the system meant risking isolation from global trade and capital. Few were willing to try. But history has a way of testing systems that seem unbreakable. In 2008, the global financial system came dangerously close to collapse. Confidence evaporated almost overnight. Banks failed, markets froze, and fear spread faster than money ever could. Governments stepped in, printing trillions to stop total economic disaster. And despite causing the crisis, the dollar emerged even stronger than before. That moment quietly changed how the world began to see American power. After 2008, the world learned a dangerous lesson. The dollar could break the system and still survive. That survival sent a powerful message. Whoever controls the dollar controls access to the global economy. Over time, financial power quietly became a geopolitical weapon. No armies required. Sanctions transformed money into a tool of punishment. Access could be cut off instantly. Nations discovered their reserves could be seized with a signature. Trust shattered overnight. The illusion was gone. Reserves held in dollars were no longer neutral. For the first time, even allies felt uneasy. Dependence suddenly felt dangerous. If money could be frozen, then no nation was truly safe. This wasn't a collapse. It was a realization, and it spread quietly. A single question began circulating in private rooms of power. What if the world didn't need the dollar anymore? The question was once unthinkable. At first, the shift was subtle, almost boring. Countries began trading directly with one another, without dollars in between. Oil deals appeared priced in other currencies. History quietly bent. Gold returned to center stage, not as nostalgia, but as insurance. Central banks began stacking gold instead of promises. No speeches. No declarations. Just quiet accumulation. At the same time, alternative payment systems quietly took shape. The dollar still dominated, but cracks were now visible. Control wasn't lost in a day. It was diluted over years. As demand for dollars weakens, borrowing becomes more expensive. Debt that once felt manageable starts to feel heavy. The privilege of cheap money begins to fade. Inflation becomes harder to control and harder to hide. Living standards adjust, slowly at first, then suddenly. The rest of the world feels it too, but differently. Global finance begins to fragment instead of unify. Chaos doesn't disappear. It just becomes regional. This isn't the end of money. It's the end of one system's dominance. And history tells us transitions like this are never peaceful. For most people, global finance feels distant until prices change. Then it becomes personal. Inflation doesn't arrive with sirens. It creeps in quietly. Paychecks stay the same, but life costs more. Savings meant for the future start evaporating in the present. What feels like bad luck is often monetary policy. Families adjust. First fewer luxuries, then fewer necessities. The pain isn't equal. It never is. Inflation rewards debtors and punishes savers. Trust in institutions begins to erode. When trust fades, stability soon follows. Nations respond differently, based on power, resources, and timing. Some turn inward. Others form new alliances. Trade becomes regional instead of global. Efficiency declines, but control increases. Currency blocks replace a single financial language. Exchange rates become political battlegrounds. Volatility becomes the new normal. Businesses hedge constantly, never certain of tomorrow. Stability becomes a competitive advantage. And power slowly shifts toward those who planned early. Markets don't move on logic alone. They move on belief. Once belief cracks, reactions accelerate. Investors rush toward anything that feels real. Scarcity becomes a story people tell themselves. Panic spreads faster than policy. Governments reassure, but reassurance has limits. Every system depends on confidence. And confidence, once lost, is expensive to rebuild. The world isn't collapsing, it's recalibrating. The question now isn't survival. It's who adapts first. History shows money systems don't disappear overnight. They fade. The dollar wouldn't vanish, it would share the stage. Power shifts quietly before it shifts publicly. Financial centers relocate without headlines. Trade routes redraw themselves. New reserve assets compete for trust. Technology accelerates the transition. Digital money promises efficiency, but demands faith. Control becomes programmable. Freedom becomes conditional. Every transition creates winners. And it creates losers. Those with assets adapt fastest. Those without buffers feel shocks first. Corporations hedge. Governments borrow. Debt quietly reshapes behavior. Inequality widens during uncertainty. Social tension follows economic stress. Stability becomes political capital. And fear becomes a governing tool. No currency rules forever. Every system believes it's permanent, until it isn't. The dollar's strength was trust. And trust is fragile. This isn't the end of money. It's the end of certainty. The future belongs to those who understand systems, not headlines. Power rarely announces itself. It simply moves, silently. And when the world notices, it's already too late.